Welcome to this season of Traders and Exotics, where we're going to be interviewing some of your favorite traders and some of the most exotic cars. We're hoping to pick their brain about the market and get some insights about how they trade. Well, without any further ado, let's get going. Welcome traders to another episode of Traders and Exotics, and today we have Ruan Landsberg, who is our guest, and we're going to be talking everything trading, technicals, and getting to know him a bit better. Ruan, welcome.
Hi guys, thanks for having me. Thanks for Robson for obviously taking time out of his day for having me on this show. Hope you guys are ready for what we're about to talk about. Let's just enjoy the ride and enjoy the journey.
Yeah, great. Ruan, tell us about you. Someone who's never heard of you, tell us about Ruan. How did you get started in trading? Just tell us about you personally.
Well, I started trading about probably 8 years back, before there was a big buzz in South Africa about trading. Back then there was not all the knowledge that we have available today. There was not YouTube videos, there was not all the access we have today. I did my first course back in I think 2014, started getting into the industry, and like most traders, obviously thinking I'm going to make $1 million in the first week of trading. There's my deposit, and actually made about 30k in the first week.
Oh wow.
No risk management, obviously no stop losses, no idea of news or fundamentals, and end up losing everything within 2 days of a Australian dollar interest rate.
Was this $30,000 or rand?
30,000 rand. No.
Oh, okay.
That time I was still working as a security guard.
Oh wow.
And,
okay.
Yeah, and studying at University of Pretoria entrepreneurship. So obviously being the entrepreneur that I am, rather than seeing I lost 30k, I said, okay, well, imagine I was going in the right way, I would have been on 60k. So
True.
See, being the optimist in that situation, and I just got the hunger for obviously learning more and getting more into this space, and that picked off. Obviously did some more education, did some more research on my own, and in that time I was trading about 7-8 months in, and there was a day I did about a $680 trade. And I was still sitting in class, going to my day job, working in Sandton and Howie as a security guard.
Okay.
And I said to Quentin, well, I just made my salary in a day.
Wow.
So I'm walking out of class now, and I'm going to drop out. And that's exactly what we did. Obviously not knowing that you need to have at least 6 months of consistency before looking at doing anything like that. And obviously now the added pressure was on us, because now there's no income and we have to pay your cars, your university accommodation.
Yeah.
So I think that's obviously one of the biggest lessons I've learned when going full time, is have at least 6 to 12 months saved up for all your expenses, and have at least 6 months of consistency before you're looking to just jump into trading. It is an industry for everyone, I will say. Obviously anyone can become a full-time trader, but in the end it's about the consistency and building something for yourself.
I like what you said there in regards to consistency, right?
Yeah.
Because we find that the people who make it in this industry are the people who do the small things consistently, taking the same setups every day, having quite a very rigorous schedule in regards to that. And a lot of people, I think, come in with the attitude of get rich quick.
100%.
Right? So what did you say to someone who says, hey, I want to be more consistent? What are some of the things you could tell them and say, hey, this is how you can get consistent?
I always say with consistency, especially in anything, it starts with your day to day. It starts with making your bed, getting up at the same time, going to the gym, eating clean. Consistency is building good habits in the short term, and then obviously that turns out to be consistency in your life as well. But in the trading space, I will obviously 100% say get your mindset right, which is doing good things, building good habits. But moving from there, it's getting the right trading plan. So I think we all always stuck on the right trading strategy, which is something with the right name that somebody markets. But in the end, it's about getting the right trading plan. Like Robson said as well, becoming a consistent trader is the word itself, consistency. Doing consistently the same thing over and over. If you're trading Nasdaq, have the same risk management the whole time. Have the same technicals in place. Have the same plan. If you're only taking buys on Nasdaq like I do, for example, it's taking the buys over and over, waiting for the dip, taking the buy, waiting for the dip, taking the buy. And as soon as you take that first sell, it's like the forex market will know and chow your money just there. So that's building consistency. It's getting the right plan and and obviously following that plan with the right risk management and the right pairs. What pairs am I going to trade? I'm going to trade these 5 pairs. Am I going to read that? Am I going to do that? And then obviously figuring out what technicals works better with your brain. Me myself, I'm a big on fib. I can see fib without even putting it in the market.
Because your eyes get used to those levels.
Exactly. So that is exactly what my brain sees. So for me, trend lines is something I don't understand. I can't see it. So that's the thing. You need to realize that you need to have your own edge. Sometimes you're going to use support resistance or psychological levels or whatever. And you need to find what does your brain see. Look at a clean chart and say, well, my brain just picks up the support levels or the zones or whatever it is.
Now that word you used just now is probably a word people are going to be hearing for the first time, which is edge. Now me and you probably know what edge is, right? Explain to someone who's never heard what edge is. They're probably thinking it's Gillette edge or something like that. What is edge?
Well, your edge in the market is, I think a lot of, especially some of my students will come to me and say, well, show me exactly how you trade. And I'm like, well, there's no reason to it. Especially that's why people struggle taking signals. You can have a profitable trader doing signals and still some people will make money, some people lose money. Because that guy's trading with his edge, his own edge to the market, his own way of seeing things. So for example, you can be a trader trading 200 points. Then you jump in and out of the market. But now you take that trade, same as this guy or your mentor, whatever, and he gets out of the market, you in class or you at work, and you forget to jump out of the market. He makes money, you just stop loss, and you basically don't see the same thing as him. So creating your own edge in the market is actually spending time in the market. It's not just saying, well, this is what I do on a day-to-day basis. It's actually going through the market and backtracking the market and running through the market and seeing what are you going to do different. Is it going to be risk management? Is it going to be a money management plan? Am I going to be a swing trader? Am I going to be a day trader? There's so many different things that makes you different. Let's say, for example, I love the 7-8% fib. So that is the one thing I wait for a dip to my 7-8% fib and then take the trade. Or on like Nasdaq's always on an uptrend long term, so I always wait for the dip and I buy the dips. So that's my edge on my Nasdaq strategy, if you want to see it that way.
And I like what you said in regards to me and you might trade the same strategy. Right. So let's say we trade Fibonacci retracements, trend lines, or whatever it may be. But you might find that you actually make money trading your strategy. And I don't.
You lose money.
I'm actually losing money. Right. And I think it's important that you need to do what works for you.
100%.
So a good example, if you have a full-time job and you can't look at the chart every 15 minutes. Maybe it's better for you to be a swing trader.
100%.
Right. But if all you do is trade all day, maybe you can be both a swing trader and a day trader.
100%.
Right. So so are you a day trader, swing trader? What kind of time frame?
So I'm a bit of both. So I obviously have the investment company, the Fund Cubic Wealth Management, and on there we're looking at longer term opportunities. So we're focusing on the longer term. But on my personal retail accounts, I'll obviously do some day trading because I have some more time available, and I have a bigger risk appetite for myself than for my investment company. So in the end, you can, if you open my charts as well, you'll see that I have Forex day and then Forex swing. So I know if I open the Forex swing page, it's straight off. I'm looking for swing opportunities. I'm looking for reversal indication. I'm looking for continuation. Where with my day trading, I'm focusing on a different aspect of the market. So you can do both, but especially like I said with the working class, all my students in the working class, I always tell them rather look for swing trading opportunities. You don't want to sit at work and constantly stress about your trades. But swing trading obviously brings a different aspect to the thing of having the patience to wait for the trade to play out. A lot of people take the swing trade opportunity and then actually close it as a day trader. So you're risking a 1-to-1, and in that sense you're always struggling because you have to have at least a 3-to-1 risk reward. And if you're risking 1% and making 3%, you can actually lose 70% of the time and still make money. So that's once again another edge, is to have a good risk reward on your trading.
I love that. And so explain to someone who doesn't even know what risk ratio firstly, risk to reward, right? Because like you said, you don't need to have very high win ratios. As long as you have a good risk to reward, 100%. You can actually lose 50% of your trades and still be profitable. So explain that to us.
With a good risk reward, it's all about, let's say you're taking a EURUSD position for a buy, and before you don't put in your stop loss and decide I'm going to risk $10. You first see where, for example, the previous spike is. Obviously you'll have your own way of identifying where stop loss should be. For me it's usually below or above your supply and demand zones. Okay, so if you put in you see your stop loss should be 300 points. Okay, then you're risking 300 points. That means your take profit should be at least 900 points for you to get that 3-to-1 risk reward ratio. So just above your buy, you'll usually have a minor level, and that's where the market will start pulling back a little bit, and that's where retail gets scared out of the market. So for you to jump out there, you're constantly trading a 1-to-1.
Yeah.
So if you take that win, the next one you take a loss, then you're back to break even. But if you actually hold your position, trust in yourself, rather lock profits, and then take the trade up to the highs, you'll have a 900 point trade. So let's say, for instance, you're trading a 1 lot size, you'll do $900. That means you need to lose 4 times for you to first start losing profits.
Correct.
And obviously you're going to have a smaller stop loss later on, but in the end your stop loss should always be the same amount. If you're risking $30, you should keep risking $30 till at least doubling your account. Then you can move to a different risk factor.
And I like that, right? Because technically it's not about how much you make, it's about how much you are willing to lose in a trade, right?
Yeah.
So it's unlikely. So let's say if we had 100 trades and we're risking 1% each, right? You need to be wrong 100 times in a row to lose that account.
Yeah.
But being wrong 100, it's not impossible. But if you have a strategy with an edge and good risk to reward ratios, losing 100 trades in a row
it's not easy.
yeah, you need to be doing something incredibly wrong for you to be losing that type of money.
I think that's one of the first thing I read back in 2014 when I started trading is you can lose 80 trades and then win the next 20. And that's what people don't always realize is as soon as they start losing, they want to over trade or over risk or something to get that money back. And that's usually where big losses ends up.
Yeah. So one of my favorite trading books is by Mark Douglas. It's a psychology book on trading, right? And one of the things I love what he says is that your wins and losses are almost not in sequence. It's not like I'm going to win 10 trades and then I'm going to lose 10 trades or whatever case. It's like it's always varied. So you could lose 2, win 2, lose 1, and you could also go on a losing streak
100%
as well, right? So I love that because psychology is such an important thing when it comes to trading, right? And how do you manage your psychology when it comes to trading?
Yeah, well, for me, I focus on my personal life. I don't focus on the charts itself. I'm a very disciplined person when it gets to anything in life. I work out every day. I wake up at the same time every day. I have the same things that I do. I eat clean. I don't eat takeaways. So it's about building that discipline and then having the right trading plan. So I have my trading plan written down in front of me on my wall, printed out, and I never go off my trading plan. So that's what makes me, let's say, different than somebody that's struggling in the market, is that I followed the same plan. And I'm also disciplined to keep doing the same thing over and over and over again.
Okay.
Yeah.
So you have quite strict habits.
100%, yeah.
Okay. So I like what you said there. So basically those habits you've built into your personal life overflow into your trading life.
100%.
Okay.
That doesn't mean you can't enjoy yourself. I mean, from time to time, we still have a good time and and still eat a refeed day on a Saturday. We eat our takeaways or our pizza. But in the general sense of your life, it should be a habit to eat clean or to do have good habits or read a book or build your psychology in the sense. In the end, trading, I always say trading is 80% mindset, and people are like, but it isn't. You need the right strategy. And in the end, I always say this: you can have a good plan and be a bad trader and make money, or you can be a good trader and have a bad plan and lose money. So you get guys out there that actually understands what the market is doing, but they just don't have the right plan to do it. And there's different ways, obviously, to approach the market in that sense as well. If you look at account flipping, I call it leverage trading. I mean, you can do that plan. I also do it from time to time. I'll take Nasdaq and I'll do some leverage trading and I'll do account flipping. Okay, but it's a different trading plan then. But then you need to consistently do the same thing over and over again.
100%.
And not just keep losing, especially if you have your oil at the moment. Oil is shooting through the roof.
Yeah, correct.
Obviously with what's happening in Ukraine. And everybody's just selling oil, goes up another $5 per barrel. Next day they sell again, and they keep selling the whole time. So they're just taking losses, where the market makers are just riding up the wave. And then we're actually talking about it today. Me and my friend that trades with me is We bought in 2019 with the market crash. We bought oil.
Wow. Okay.
At $4 when it opened. It went to $0. Opened at $4. We bought oil. And I said to him, imagine holding that trade till today.
Yeah. You'll be seeing some amazing
You'll be seeing
profits.
some profits. And
yeah,
that's how we need to approach everything, especially like with Nasdaq. Everybody keeps selling Nasdaq for the longer term, but if you see it's at a new high price, but then people are going to sell again and sell again, but in the end it keeps going up and up. So if you're looking for a big long-term investment, once again, wait for a big dip in Nas and take the buy up.
So what are your thoughts now on the whole tension between Ukraine and Russia, and where do you see the markets going with that?
Well, at the moment obviously the market is going crazy. I think with the Europeans are flying. Your safe havens like your JPYs, your gold is obviously flying. And I think that's something people need to understand, is that as soon as you have tension or war or something, you will have your gold will fly up, because it's a safe haven. So people take their money out of the markets, invest it in something that's safe, that's sustainable, which is gold. And especially with the indices and the Europeans now moving, it's it's going to keep moving, and it's going to keep getting wilder and wilder. But if you look at the market in a sense of forgetting the war, forgetting what's happening, the market is running with where it's supposed to go. Oil has been in an uptrend before the Ukrainian war.
Correct.
Gold's been in an uptrend before the war, and people losing money once again is the people trying to turn around the market and fight against the billion-dollar funds and the banks, etc. So in the end, just stay calm, take to note what's happening in the market. Obviously have your right risk factor ready, because if you're risking now 10% with the how volatile the market is, obviously your brain immediately tells you that what if it turns against me. Now I'm sitting at work and I just read something on Facebook about another breakout of the war or something that's happening. Now I have to check my trade, hit stop loss, and then you just keep repeating that pattern. So once again, trade with the trend and make sure you're, especially now more than ever, one thing you can obviously do is take a risk down. So rather than risking, let's say 1%, take it down to 0.5%. It is somewhat difficult markets to trade at the moment, I'll say. So just change your risk factor and take a little bit down, take the stress off you of I need to be right the whole time. And know, well, if I'm wrong, it's going to go against me, but if I'm right, the fundamental will run with me, and I'll probably make a 1 to 10 trade with a perfect 5% trade then.
Okay, so Ruan, what would you say to, because you're quite experienced now, 8 years in the industry, so I would say you've lost it more than a lot of people in this industry when it comes to trading, right? What would you say to someone who maybe has been trading for like 1-2 years, they're trying to get the hang of it, but things are just not working out? What piece of advice can you give to that person?
It was actually, somebody asked me that question like 2 weeks back, and he said to me he's been trading for 2 years, and I think that's once again something that a lot of people don't always see. It's you get people 100% that will trade 3 months, they'll just pick it up and they'll become a full-time trader. I don't know how they do it, but there's people out there. Then you get people that after 2 years are still struggling, and I've realized that once again, number one, we need to realize that we're in the biggest market in the world is the forex market.
Correct.
So we need to know it takes time. Once again, if you're looking at what some forex traders make on a monthly basis, I mean it's above engineers, some of them. And we need to realize that you go to 5-6 years to university just to earn, let's say, 40k per month. And with the forex market, we jump in straight off when we want to make the 60k per month after a week of trading. So we need to realize it's a long-term thing. It is a full-time thing as well. So if you're looking at going full-time, you need to realize it's going to take time, and you need to find your own way of doing it. So a lot of people especially jump between courses. So now you're buying this course and you're buying this course, and you're constantly fluctuating. There's this wheel of death in trading that I've seen before. Where
the cycle of doom.
The cycle of doom, exactly what it is. And you start trading, you become a little bit, you usually get to that point where you're 50-50. You lose some, you win some, but you don't blow your account. So you're always fluctuating up. And then you see this new guy in the industry, and you want to join this new course. As soon as you want to join that new course, you basically reset your trading. So now you follow this plan for 6 months, and just like that, you reset everything. Now you need to relearn how to use the strategy or this way of trading, and that messes you up the whole time. So I'll say find something that not works for you because you're not sure what works for you yet. Find something that you're comfortable with, the right way of analyzing, something that you enjoy. I remember when I started trading, I used to dream about trend lines. I'll see the trend lines the whole time because that's the first technical that I learned. So once again, find your way and something that works for you, and then stick to it. Keep doing it over and over. Don't try and change things up as soon as it doesn't work out. So I'll say that's probably the best advice I'll give to everyone is don't keep flipping through different things. Find something, study it, learn it, backtrack it, and keep doing it the whole time. Even if you start losing in the beginning, it will become more profitable and more profitable. So it's not about changing your strategy, it's maybe changing your risk management or your different pairs. Some pairs runs, example, in channels, which is a trending market. Then you get different pairs that runs in sideways market, and then some pairs like their fib. So there's different technicals to the market, and you need to figure out what pairs are going to work better with your way of trading, and then focusing on that, and then sticking to it, not jumping to a new thing after 3 months.
Because like I said, I think we all started there, where we started with one thing and then we're like, I took 2 losses, and now you change to something else. So it really is, like you said, I like what you said before, it really is about being consistent.
100%.
Like,
that's exactly what it is.
Be consistent even in the strategy you trade, right? And you mentioned something about a trading plan. Most people don't have a trading plan. 100%. They have a trading strategy, but they don't have a trading plan. What do you think is the difference between those two?
I'll always say in the end, especially, obviously, remember a lot of people brand their trading strategies in the sense of this. I'm using the Bentley strategy. And in the end, it's just a.
That's a good name.
It is a good name. We're gonna sell it.
Veracity Markets Bentley strategy.
So there's a lot of different strategies, but in the end, what a strategy is, it's a trading plan. It's exactly the same thing, it's just branded in a different way. And that's what I always say, what a decent trading plan is, it consists of your trading rules. So for example, you'll say, before entering a USD market, I'll always check the dollar index. I'll always check my correlation, I'll always check the general trend. So having your trading rules ready, number 1. Then number 2, obviously saying, well, this is my risk management, I'm going to stick to this risk management. Number 3 is saying, well, this is the pairs that I'm trading, and I'm sticking to this pairs the whole time. So there's a lot of factors that comes into a trading plan, and the most important thing is probably writing down your trading plan. Because a lot of people say, no, my trading plan is in my head, but there's a lot of things in your head, but you don't follow it. So it's the same thing with goals. If you don't write down goals, you're never gonna just wake up and keep going after that goals. And that's the thing with the trading plan. If you read it and you stick to it, it's going to become a consistency, doing the same thing over and over. So you're going to start feeling comfortable by what you're doing.
I love that, because like I said, it's always a good thing to have your trading plan actually written down, so you can follow it, right?
100%.
So traders, if you do not have a trading plan, talk to your account manager. We actually have a great trading plan which you can actually fill out. You can stick it on your desk, you can stick it on your table, wherever you want to place it, and every single time you trade, you will have that trading plan beside you. And you don't be guessing when it comes to the market. You want to always know that every single time I do one single thing, and you don't change too much.
100%.
So, all right, cool, Rod. Like, I like the fact that for you, trading is very integrated into your lifestyle. It's not a hobby.
It's not a hobby.
You treat it like a business.
100%. I think that's the one thing. The key word is treat it like a business. That's what trading is essentially. And
let's talk about that, because I think a lot of people take trading as a hobby. They've got this get rich quick mentality where they're like, well, we were talking about Lamborghinis just now, and like, 100 Rand or $100, and next week I'm at Lambo. What kind of returns, when you're talking about returns, because it's a business, we all want a return on the business we are invested in. What kind of returns do you think is a good return? A realistic return, which is not about flipping accounts.
Okay, so well once again, I think that question I get a lot, in the sense of what should my daily profit target be, and get that out of your mind. Is probably the first thing I'll say is there's no daily profit target. Okay, you don't know how the markets are going to be today. There's days where I wake up on a Monday morning, I take 3 or 4 trades, and that's all I take for the rest of the week. There's weeks where you're going to wait Monday to Wednesday, and then Thursday all the opportunities lines up. But where retail obviously loses is they take trades Monday to Wednesday, then on Thursday they don't have the capital to take the trades in on Thursday. So for me, obviously with our investment company, we aim on doing 30 to 50% per year. But that is obviously with a very low risk appetite. We're risking 0.25% per trade, obviously to make the investors comfortable with the product. So for you to have a realistic goal in the trading industry, I always say start with 10%. All you have to do, try and make 10% this month. Don't try and double your account. Like you said as well, forget account flipping and all that. That once again comes with time and a lot of skill and a lot of knowledge. Focus on making even 5% a month. If you can make 5% a month for 6 months, then you're going to move it to 10%. And I was speaking to Robson about this as well. I'm doing a YouTube video, $100 to $1,000. And a lot of people will say, well, it is possible to do that. Everybody does that. But nobody does that consistently. Is starting with $100, using 1 cent, and doing the same thing over 1 cent, 1 cent, 1 cent. So that is the consistency, and that is how you build a long-term thing. And you'll start seeing how your returns gets 10%, then 20%, and then you'll start figuring out more insights to the market, and then you'll do a 50% month. And then obviously you take your profits, and that's when you go into trying for 100% month, pushing your risk appetite up to 10% per trade. Then you only need about 3 or 4 trades to actually double your account. So that's the thing. But starting off with a 5% month, building it up to about 100%.
Okay. So one of the questions I always ask my guests is, Ruan, if you could go back 8 years to the day you started trading, right, and knowing what you know now, what would older Ruan tell younger Ruan about trading and
use a demo account?
Okay.
That is probably one of the best advice I will ever give. Is I understand that the emotions isn't the same 100%. Okay, so as soon as you go live, the emotions is now attached, and now you're stressing, etc. And that's not there on a demo account. But one of my youngest students, I trained him when he was 16 years old. He started, just obviously that time he was too young to trade. So we're just playing around on a demo account, and I said to him, if you want to become a full-time trader, you take that demo account and use it as it's a live account. And his dad actually used to pay out everything he made on the demo account. He paid out to him. And it was a good way for his dad, obviously, to show him, and obviously something I will take on to my kids one day. But on a demo account is where you basically get your free trial. It's like where if you buy software, nobody will buy software without a free trial, because you don't know if it's going to work, especially if you're paying 20k. So I see a lot of young guys pushing their last 5k into the market. Number one, also don't invest something you're not willing to lose, because if you're constantly stressing about that 3 or 5k in your account, that again opens up new emotions to your trading. So when I have to go back, I'll say, first of all, start with the demo account and learn the markets. Educate yourself on how does the news run. If there's a news event, don't just not be at your PC. Sit there and watch on a small time frame, see how the market reacts to that news event. If there's a Friday market close, see how the market reacts. Especially a big problem with where people have a problem with brokers is the switch over at 11 o'clock. So see how the market switches over at 11 o'clock, and see how the volatility picks up through the session changes. See how the market reacts to the London session, the Asian session, and actually study those pairs in time. And then don't look to go live too quick.
I love that.
Educate yourself first, and then move to a live account.
I love that. And there's a trader I follow. I don't follow a lot of traders, but there's one trader I follow, Stephen Josephs, and he says lot sizes is like the volume to your emotions.
It is.
if you have a $100 account and you're trying to trade one lot in a $100 account, that is definitely gonna have your emotions
have a big
in a very very high volume, right? But if you have you ever noticed how when you trade 0.01,
you won't even be watching it.
You don't really care.
You don't care.
And that's how trading should be. You should be so comfortable with your position sizing that you're like, if it wins, great. If it doesn't win,
also fine.
Right. And that's how trading should be. Probably gonna blow your account.
100%.
And let's talk about that. The first time you blew an account, you told me that you had 30 grand.
I blew 33,800.
How important do you think it is for traders to actually go through that phase of actually blowing their first account, so they know what not to do?
I always say, people always ask me, how did you feel when you blew your account? And I'm like, well, I still blow accounts. It's a never-ending process of doing it. But the way I always see it is, you're always going to lose money in everything in life. Doesn't matter what you do. if you go out partying with your friends, you're going to lose money on different things. If you go to university, you're going to pay that money to learn how to become an engineer. So you're basically, in a sense, losing that money. If you're driving around in a car like this, then you're obviously losing money on petrol. So you're always losing money for a reward.
Correct.
So there's always a loss that needs to happen before you get to the reward. And I will always say, take that as a lesson. If you blow an account, which you will do, doesn't matter how far you are in trading, take that as a lesson. Try and find out, well, what did I do wrong? Rather than just refunding look at your trading history, see where you went off plan, where did you go wrong, is the strategy not working for me? And that's actually something that I found out how I know what pairs I'm trading today. By looking at my trading industry, I had a no win ratio on any CHF pair.
Okay.
So you will not see a CHF pair. If you phone me about a CHF pair, I will tell you, okay, don't trade that. Because I just found out by taking constant losses on that pairs that I have no idea how it runs, and it's because it's safe havens. So there's always a pump happening somewhere in the world into the Swiss franc. So that's what I will say. Take it as a lesson. You're always going to lose money, and losing is part of life, obviously, as well. So we need to lose to figure out how to win in the end. If you look at any basketball player, he misses 5,000 shots before he puts in the first one, and then becomes a consistent. It becomes a habit in how to throw the ball and where to angle it, etc.
Great. So Ruan, you said something which is quite key in regards to, you said that you know that when it comes to CHF pairs, your stats tell you that CHF pairs are not for you, right? How important is it to keep stats and actual records? Because there's so many tools these days. There's my FX book, there's your trading statements. How important is it for you to say, okay, I've taken X amount of trades and these trades are just not working for me? Maybe it's time I drop this pair or add this pair or something like that.
I always say that it's probably one of the most important things is to record all your trades. So your position sizing, where did you enter, where did you exit? So what I usually do is I write down where I entered, all my trades, my lot size, my exit points, everything. And by doing that, you obviously learn. Trading is a lot of learning what you're doing wrong to do it right. And if you don't know what you're doing wrong, you're never going to know what to do different. So if you're not writing down your mistakes, you're always going to end up doing the same thing over and over. And I feel that is the same thing. If you make a mistake in life, you always say you don't want to do it again. A donkey doesn't it is it twice. But if you're not writing down your mistakes, you're basically doing that. You're hitting your head over and over on the same thing, on the same trade, on the same risk management. So I'll say it's so important to write down all your trades, all your positions, and even do predictions, do screenshots of what you predict in the market. Because in the end, if you put out predictions of where you see the market going, you can see how it actually is flowing and how did it play out. So if you indicated a buy on this pair and it went down to a sell, then you might be trading against the trend, or you didn't watch the news, or there's always something. It's usually, and I think that's where a lot of losses come from. A lot of people make the smallest mistakes in the trading, and then they lose money. Where if they can make that small adjustment, it will actually change everything.
So do you journal your trades?
I journal all my trades, so I have my own journal. But I also do predictions on TradingView where I predict a short position or a long position. So that actually then plays out, and then I can actually see how the market ran from my entry point, and actually shows you what you did.
Do you use any EAs? What other tools do you use? EAs, indicators. What other tools do you kind of use when you're trading?
So for me, I mostly focus on key levels in the market. So liquidity points is basically something that if a market breaks that certain point, short positions from banks will be liquidated and the market will change momentum. So for me, I mostly focus on key points. And then FIB, obviously, FIB you guys will see when I analyze. I don't even put in my FIB. I will look at a chart and say, well, it's at the 78% FIB, so we're going up. So the technicals that I teach to everyone is obviously wide. So if you see my analysis that I do for my team, I put in support, I put in resistance, I put in supply and demand zones, I put in trend lines, I'll identify patterns. And then obviously take, for example, a drawing tool and actually draw the trend. So you know the weekly trend's up, daily trend's up, 4H is uptrend, so we're looking at buyers only. So there's so many different tools, and the reason I analyze like that for my team is I realize that I have a network of people, Okay, so where 20% will see the trend line, 20% people will see the support. I always say that the market's going to go up from this point. It's going to go up if you put in a technical or not. Even if there's no trend lines or support or anything, the market's going to go up because there's buying power that's at some point, and that's where it comes to key points in the market. And then another thing is looking at psychological levels, which is round numbers in the market. So let's say I know USD is close to 0.73 at the moment. So that's a key level. So the market will usually spike a little bit higher, take out that key level, and then drop from there.
Okay. So we've been working together for a while now at Veracity Markets. So I wanted to find out from you, if someone say, I'm looking for a broker, tell me the number one broker to go to. You're gonna say
Veracity Markets.
Of course.
Always.
Why do you love Veracity Markets?
Well, for me, I think that's something we've spoken about a lot, and especially with Shelly. So I've known Shelly for quite a while, being in this industry, and a lot of people think that's why I moved to Veracity as choosing my partnership broker. And that's not actually the reason. Even though me and Shelly have a good relationship, and same as me and you. Veracity Markets doesn't have all the tricks and things they're trying to get your clients, to get you to fund. And the trading experience with Veracity for me has been incredible, and that's why I chose to move to them. I always say, as a partner of Veracity Markets, is why will I refer somebody to a broker that I'm not personally using? So I need to choose where's my money going? Where am I trading? Where's the trading conditions better for me? And that is how I will choose my partner as well, which is why I choose Veracity, because all my money is in Veracity and I know how the process runs. Because a lot of people will say, okay, use this broker, but they've never even done a withdrawal or a trade on that broker. So in the end, for me, it's choosing somebody that's going to be here in the long term. It's not going to be here for another year or two, which we see a lot of brokers obviously coming and going. It is a difficult space to be in. So I always choose Veracity because they're gonna be here for a long time. And you guys will obviously, 10 years from now, the difference they will make in the market, because what they stand for is something I stand for as well. You're showing the good but also the bad. Robson is not stopping me when I'm talking about blowing an account. A lot of people will stop me and say, no, don't say that, let's talk about the millions you make. And I think that's another reason that I love Veracity, is you can just be you, and you can talk about the good and the bad in the industry, and show people that there is potential, and a lot of potential. It's a $7 trillion market, but there's also the potential that you can lose money, which is part of the learning journey.
No, because like our name says, like Veracity, we are about transparency. And where we make mistakes, we try to fix those mistakes very quickly. But we're all about transparency. Now, talking about money, what is the biggest withdrawal you've ever had hitting your account? How did you feel when you got that message coming into your account?
We made a withdrawal once of, I think it's 2.4 million.
Wow, okay.
But I've also lost, which you guys will see, full transparency, I've also lost 1.2 million in COVID crash on a GBP trade. And that's why I said there's two different emotions to it. If you lose 1.2 million, you want to sit and cry the whole day. But once again, we all look forward to that big withdrawal we're going to make one day. And I think the one thing to realize is, as soon as you get that withdrawal, it's like, okay, I've done it, but what now? And to remember to get something physical for your reward. A lot of people have 2 million in their trading account, but it's just in the trading account. So you have to get something physical for you to say, okay, well, it's paid off and I've done this actually. Just leaving it in your trading account or in your bank or something is not going to get you somewhere. I'm a big thing of reinvest your money, but always know that you need something physical to remind you why you're doing what you're doing.
I love that. Okay, Ruan, our interview unfortunately is coming to an end now, and I'd like to thank you for just being like a great guest. If people want to find out more about you, more about what your company does, where can they get that info?
You guys can follow me on social media. It's Ruan Landsberg SA on Instagram and on Facebook and on YouTube as well. It's Ruan Landsberg Trader. And then you guys can also check out my company, Quebec Forex Institute, and then Quebec Wealth Management as well. Thanks for having me once again. I hope you guys at least learned something and enjoyed the interview. Yeah, and I think that it was a great interview. You probably learned a lot from this. I learned some stuff as well, because I think you never stop learning. Yeah, 100%. That's another thing. You never stop learning in the industry. Well, traders, thank you. This was another episode of Traders and Exotics, and we will see you in the next one. Cheers, guys.